One of our missions on Wealth Track is to not only help you build your wealth, but also protect it. It turns out that one of the greatest threats to your financial security is the cost of health care. So we are devoting this entire edition of Wealth Track to health insurance. The essentials of health insurance, to be exact: medical insurance, disability insurance, and long-term care insurance. At the end of this program, we want you to feel protected, or if you are not, to know how to get the insurance protection you need. And don't think if you have private insurance or are covered by Medicare that you are necessarily safe. Here's why. According to a study by Harvard Law and Medical Schools, nearly half of the Americans who file for bankruptcy do so because of medical expenses. But that is not the real shocker. 3/4 of the people who filed for bankruptcy because of medical bills actually had health insurance. Another eye-opener: 80% of the 45 million Americans who are uninsured are employed, and 16 million earn more than $40,000 per family. And it's not just individuals who are suffering from escalating health care costs. Employers are too. Last year, for the first time ever, the health care costs of the Fortune 500 companies exceeded their combined profits. But help is on the way. There is a revolution occurring in health care insurance that makes it easier and more affordable to get the coverage you need. We'll discuss what it is and how to get it next on Consuelo Mack Wealth Track. Paul Zane Pilzer is a dynamo, I should say. He's an economist. He's a successful businessman. He's a teacher and author of 7 books, many of them bestsellers, the most recent being The New Health Insurance Solution: How to Get Cheaper, Better Coverage Without a Traditional Employer Plan. It is an eye-opener. You're going to be stunned by what he's going to tell us. And, you know, Paul, I want to start with you because I mentioned that your book was an eye-opener. What is the new health insurance solution that, you know, all of us, especially pre-Medicare, should be aware of? What are the solutions that are out there that we should know about?
The primary solution is that everyone should get health insurance independent of their employer. Health insurance should not be tied to a job, especially because very few people keep that same job until age 65. If they find themselves fired, retired, or just want to early retire before age 65, the greatest missing hole in their financial plan is how do they get health insurance between age 55 and 65. In contrast, if they bought an individual plan without an employer before that happened, an individual plan, you're locked in based on your health. You get underwritten, you get looked at, and in 46 states you get a very cheap rate if you're healthy. But then if you get unhealthy, your premium cannot be raised because of illness. It will go up with your age, and it will go up with general inflation, but you can have $1 million claim and they can't raise your premium 1 penny for it.
All right, so let me stop you there. If I am covered by my employer, do I drop it?
Mixed question.
Yeah.
How are you covered by your employer and who's paying for it? Most major companies pay for the employee, but today require the employee to do withholding to pay for 50 to 100% of their spouse and children.
Right.
If you have a healthy spouse and healthy children, run, don't walk, and get them an individual plan. It will be much less money than your employer plan if they're healthy, and now you've got them permanent coverage if you retire early. If you are getting free coverage from your employer, it's going to be a mixed bag. You're going to say, I'd love an individual plan, even at half the price, but it's not half the price because my employer is paying for it.
Right.
But help is on the way there, too. The fastest growing phenomenon in health insurance today are health reimbursement arrangements, HRAs.
Right, HRAs. Tell me about HRAs.
With an HRA, an employer says, I don't know about your health care, I know about money. You work here, I give you money. I will give you a tax-free allowance of $300, $500, $1,000 a month. You go buy your own health insurance and keep me out of it, totally tax-free.
All right. So now, are employers actually stepping up and volunteering to do this, or do you have to go and ask them what do you do if you are employed and you are being covered by health insurance at your employer?
Employers are giving you an option. For example, last week Ford Motor Company, in one decision, took 28,000 white-collar early retirees and said, you're off the group plan, here's an HRA, go buy your own policy. That's happening throughout corporate America. But if you don't work for a company that has an HRA, you should ask. When you go into your employer and say, we would like a choice to opt out of our group plan and get $200, $300, $500, $800 a month, the employer may not know about HRAs. HRAs are the fastest growing phenomenon in healthcare, but health benefits move rather slowly. And health benefits and HRAs allow you to take your money and buy your own policy, a policy that's independent of your employer that you keep till age 65.
Okay. Now, it's so interesting. So what you're advocating is that we have to take charge of our health insurance, and the sooner that we can do that, the better. What about health savings accounts? Another new solution, right?
Health savings accounts are new. They came out and they were passed in 2003 and started in 2004. They're growing a lot slower than many of us expected. Today,
Why?
They're pretty complex.
Yeah.
You've got to first get a health insurance policy that's high deductible and meets certain qualifications. Then you've got to go to a bank and open a health savings account. Now, that said, every American should have a health savings account because it's like a super 401k or an IRA on steroids. With an IRA or 401k, you put money in, you get a deduction, but when you take it out, you pay ordinary income taxes, even on capital gains. With an HSA, you put money in, and when you take it out for medical purposes, it's totally tax-free. Now, it's only $5,250 a year you can put in, but that's still a sizable amount of money over time. Everyone should have a health savings account. But that said, 3 years later, about 3 million Americans have a health savings account. In contrast, HRAs, which were only really a year old covering premiums, 11 million Americans have an HRA, and it's the fastest growing phenomenon to allow you to take control. Think of it as years ago we had defined benefit plans for pensions.
Right.
And the companies realized they were bankrupt actuarially when they looked in the 1970s and said, we promised these people to pay cost of living forever. They switched to 401ks and what we call defined contribution. How much did you get for retirement? How much did you put in? Healthcare is following that now as we use HRAs to switch to defined contribution plans. You need, if you're healthy, to quickly get an individual policy that you keep till age 65 when you go on Medicare. It's the major missing hole for most investors' financial plan.
And the reason you need to do it when you're healthy, if you can, is?
Because when you get it at a certain rate, when you're healthy, typically a third to half the price of an employer plan, the premium cannot be raised for the rest of your life for illness. But it will go up with general inflation and will go up with your age, but you know that going in.
And that means that if your kids and, as you said, healthy spouse, significant others, whatever, they should all get their plans now while they're healthy.
You bring up spouse
Lock it in.
And you bring up spouse and kids. The biggest thing I notice is that the person who usually has the health insurance in the family is the oldest.
Right.
That's a recipe for suicide because they turn 65, they get kicked off their individual or corporate plan, and their family has nothing. Everyone should have for themselves, their spouse, and their dependents an individual insurance policy independent of their employer that covers them and their spouse till age 65 when they go on Medicare.
And again, the reason for that is?
Because your employer plan is not insurance. It's going to terminate when you get too sick to go to work, and that's why 75% of the families that filed medical bankruptcy last year, 1 million families, had health insurance from an employer. But when they get so sick to use the health insurance, they can't go to work, they lose their job, and they lose all their health insurance.